Hello everyone, this is Syed Nishat Aadil Zaman, Senior Vice President of Wall Street Alliance Group. We are making an educational video to speak about the impact of coronavirus into the stock market. It's a very uncertain time into the stock market and clients are asking a lot of questions, but I want to go straight to the Adil. Is the most important question clients are asking: how much the market will go more down? Is it a bottom?
Our clients have been tired of hearing us say again and again for the past few years that this market is due for a correction. So we've put risk management strategies in place so their portfolios are in a very good position relative to the market right now. Now, there are a number of uncertainties right now that we are facing, right? There's this uncertainty about coronavirus. Where is it going to take us? There's this uncertainty about how much is the market going to fall? What is going to be the precise bottom of the stock market? And when is it going to turn around? These are things that even the smartest investors cannot predict, right? So let's just put that on the side. Now let's just talk about what are the things that we can predict, right? The probability of the stock market being higher than where it is right now, 1 year from now, is about 75%. The probability of the stock market being higher than where it is right now, 10 years from now, is almost 100%. So for long-term investors, they should take comfort in the fact that this is temporary, right? And historically, we've had, this isn't the first time that we are facing something like this. We've had SARS before, we had Ebola before, we've had anthrax before, and the market has always dipped in the short term, and in the long term, it has gone back up.
Yeah, and to your point, I mean, this is similar to SARS or Ebola, but unfortunately it's very contagious. Looks like the steps the government are taking, they're shutting down all the businesses for a couple of weeks, especially in New York and California. So unfortunately, whenever you shut down a business like this for a few weeks, it has a negative impact on the consumer sentiment, and that's why it's reflecting into the stock market as well. So it is true, it is a health issue, and nowadays we have on top of this whole issue, media, on top of that, social media, and also WhatsApp as well. People are constantly looking. So it's very easy to get paranoid, and that's why we are seeing a lot of volatility into the market as well.
Yeah, it's very easy to get panicked in this environment, right? I think investors must understand that this is different. This is not 2008. This is different, right? This is what we call an event-driven sell-off, right? The only reason the market has gone down is because of the coronavirus. So what does that tell us? That when there's some hope, when there's some resolution, some movement towards that, the market will go back up. And the one thing that is different in this sell-off compared to previous sell-offs is that it's very quick. 2008, it took a few years for this to happen. Tech bubble burst, it took a few years for this to happen. This time, that same decline has happened within a matter of days. So what that tells, the reason for that is that there's a lot of machine trading right now with the evolution of technology. There's a lot of ETFs right now. So the movements in the market happen a lot quicker. But what that also tells us is that when things get better, the market will most likely recover in the same speed. So if you're not invested in it, you could completely miss out on the speedy recovery.
Yeah, so as you mentioned, it's a very tough time. The sentiment doesn't look good whatsoever. So the investors are asking a question, okay, why can't I just get out everything from the stock market right now, wait for the very bottom, get back into the bottom, and when it starts to look better, that's the time to do the heavy investment.
So, it sounds really good that, you jump out when things are difficult and jump right back in when things are normalizing and you benefit from it. It's very easy to say it, it's almost impossible in reality. And the reason for that is that if we study data, the 20-year average return of the stock market is about 8.6% a year. If during those 20 years, if you had missed just 10 of the best days in the stock market, your return instead of 8.6% a year would only be 2.5% a year. And those 10 of the best days, guess when they typically come?
During this tough time.
During these tough times. So if you're not invested, you're most likely just going to completely miss out on the speedy recovery.
Absolutely. And if you take a look at the statistic in front of us, like you mentioned, SARS didn't happen and we fixed it. In 1 year, S&P, since the epidemic happened, went up almost 16%. Similarly, if you see the swine flu, what happened? If you take a look at the S&P 500 return in 12 months, is almost in the double-digit number, 26%. So there's no way to know what the bottom is and what the top is to sell it and buy it. So the best thing would be that stay investment in the course, look at your investment, talk to your financial advisor, and stay invested. So Adil, then you think is a good time to invest in the market?
So what's important to understand is that in this market, there are really two ways in which you can get hurt. One is that if you sell at the wrong time and you realize all your losses. The other is that if you're not diversified properly and you go back into history and you see that when 2008 happened, or when the financial crisis, or when the tech bubble burst, people that were invested all in technology, they lost all their money. The market came right back up, but they didn't recover. Similarly, in the financial crisis, people that had all their money in financials, they lost the money, market came back up, they didn't recover. So number one is that make sure you're diversified properly, and number two, stay invested. Now, unfortunately, it is only during chaotic times, it is only when there's panic that you're able to get 20-30% discounted prices on good quality investments. So if you have a long-term time horizon, the best time to buy is typically when there's panic and chaos, because when else are you going to get good quality companies at these levels? And unfortunately, what we are going to see is that some of the smaller companies, they will not be able to sustain this downturn, and they're going to go out of business. The bigger companies, they have the balance sheets to be able to sustain this. And what's going to happen is that when things normalize, those companies will actually be able to capture the market share of the smaller companies because they're no longer around. So if you're going to be investing, if you have number one, if you want to invest, make sure you have a long-term time horizon. Number two, if you're investing, invest in large, big quality companies, because now you can pick and choose. You're getting them at discounts. And have a strategic strategy. Don't just go buy one company or one sector. Do it in a diversified manner, and ideally do it in a way that you can dollar cost average. And a fiduciary financial advisor can sit down with you and assist you with these things.
So in a nutshell, that if someone has at least a 10 years time horizon to invest, and they don't need the money right away, it may be a good time to buy some good quality blue chip company, because things are at least down 25-30%. Meanwhile, in a summary, those people already invested, they should not jump out and jump back in. A better approach will be to reallocate the investment they have. Like, for example, if you are exposed too much into bonds, it's a good time probably to take some bonds out, as long as you have a long-term time horizon, and buy some good quality stocks. Or if you are heavily invested into one sector, it's a good time to reallocate these funds into the sectors which are probably perform well when the market will go back up.
Yeah, that's a very good point. So stay diversified. Make sure you sit down with your fiduciary financial advisor who can help you stay diversified and stay the course based on your investment objectives. An investment objective of someone who's 30 years old is very different from someone who's 60 years old. So very important to work with a fiduciary financial advisor. Now, Syed, as you know, one of the, since most of our clients are physicians, one question that keeps coming up is that, yes, we've had SARS, we've had anthrax, we've had all these issues, but this time, this is different, right? And we have to acknowledge, we have never seen something like coronavirus before. But what we also have to acknowledge is that previous instances, when the market fell, whether it was 9/11, whether it was the financial crisis, whether it was the tech bubble burst, at those times, those were novel incidents. Those were unusual incidents. And because they were unusual incidents, that is why the market fell. So just because this is different does not mean that the market is going to act differently. In the long term, the market goes through these cycles. It'll go down, and it'll, in the long term, go right back up. Another point that that we get addressed, clients ask all the time, is that it's quite visible that the health situation is going to continue to worsen, right? Why would the stock market go up if the health situation is going to worsen? And what investors have to realize is that the stock market, the health, and the economy, they're three distinct things. And they don't necessarily have to be always correlated. Right now, they're perfectly correlated. They're all going down. But the stock market is forward-looking. And the stock market is anticipating what's going to happen 6 months, 1 year from now. And potentially, the medical situation and the economy could continue to get worse, but the stock market could recover even while that's happening because it's already figured out the worst-case scenario. So, again, it's very important for investors to be mindful of these factors.
And a lot of our physicians clients, they're also saying there's a lot of vaccines they're working on as well. They're on the trial basis. So usually when SARS happened, that the following year, in a year or two, they come up with some sort of solution. So if the market sense that the health risk issue, they can contain this virus somehow, the way the market fell, it may go back right up very quickly.
Yeah. And absolutely right, Syed, that the vaccines may take longer. Mm-hmm. But what they're also doing right now is they're repurposing a lot of the existing drugs. Mm-hmm. So a treatment might actually come sooner, and a treatment might actually be within a matter of months. So again, investors must be mindful of that.
Absolutely. Yeah, these are great information. Makes a lot of sense. Now, while we are waiting for the market to go back up, there are a few things investors can do. For example, if you're high net worth individuals and you have a lot of money into a retirement account, and retirement account most likely is down because the market is down, and if you have funds available outside the retirement account, it's a good time to do something like a Roth conversion. So if the retirement account is down 20%, you convert it to a Roth IRA, you'll pay less taxes right now versus when the market goes back up, and then you take the money out when you retire. Also, a lot of our clients, they work for hospitals. They have a 401k, 403b plans. Since the market is down, if you don't need this money, it's a good time to do a dollar cost averaging and pre-fund the 401k plan. So when the market goes back up, you recover the money quicker. Mm-hmm. And lastly, a lot of our clients, they have kids and their college tuition is going high. So it's a good time to put money into the college 5 to 9 plan because the money grows tax-free and the withdrawal is also tax-free as long as you use it for educational plan. Yeah. And lastly, unfortunately, this virus, the way it's working, the people who are getting affected the most are the senior citizens. So we see a lot of search calls from people who are actually older and senior citizens to create a will and trust. But situation like this becomes very handy because all the assets are being distributed properly, anything happens to you. So it's a good time to talk to your estate planning attorney, get a basic will done, get a basic trust done, get a basic health proxies done, have a power of attorney just in case anything happens to you who can make a decision for you. So rather in the future, whenever a situation like this happens, we are all prepared.
Yeah, absolutely. Especially for the older folks, the healthcare proxy is very important. Having a trust set up is very important. I would say that, I would just add to that is that I think that the 3 takeaways that investors should have from this conversation today is number 1, you must stay the course. Don't try to panic, don't try to time the market, don't try to jump in and out, stay the course. Number 2, it is very important for you to stay diversified. You have to sit down with a fiduciary financial advisor who can help you diversify properly. Diversification at times like this is of paramount importance. And number 3, it is very important for those investors that have a long-term time horizon, that if you're looking at 10 years from now, this is an opportune time to be buying. So you should be strategically looking at investments that are good for the long term. And at times like this, it is very important when on declines like this, on chaotic times like this, it is very important that you have a fiduciary financial advisor who can look at the whole picture and counsel you and guide you through this so that you're making the right decisions. Making the right decisions at times like this can have a tremendous long-term impact, as I'm sure Syed you can attest to.
Absolutely. And we are all in it together. It's not about Wall Street versus Main Street. This is a time to stay close with your family. And when everyone is together, eventually humanity will fix the problem. It has to get it fixed. So we just want to conclude by thanking all our physician clients and the first responders who are in the front line and serving us in this difficult time. All right, so we're here for any question or comments you may have. So we'll come up with more videos sooner.
Thank you very much.
Thank you.